Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's having a good, what is it, Tuesday morning? All right, so as always, we're going to dive into your questions, take a quick look at the market structure, and what is on my radar in terms of symbols that I am looking to trade. I think the first thing I want to take a look at is bonds, and we're going to take a look at ZB. Now, if we think about the way yields, currencies, indices, and even relative outperforming stocks or stocks during earnings season here are going to affect what we're going to look at. Earnings season is cool for volatility, but it's really difficult because there's such a separation from the macro to what we're dealing with. Macro meaning what is the FOMC signaling? What is, I know there's a lot of background noise. Sorry, I'll probably have to close the window here in a bit. What is the FOMC signaling in terms of monetary policy messaging? What is, for example, oh, give me 1 second, gang. I'm sorry. Sorry about that, gang. I get the pleasure of dog sitting. And of course, the dog doesn't care that I'm in the middle of a show. I'm sorry about that. All right, so back to what I was saying. If we think about what the monetary policy messaging is, and we're going to have this beautiful quiet period before the February 1st FOMC meeting, what we need to remember is there is very likely, and we're seeing it play out easily since the last, I'd say, 4 to 6 weeks, a situation where bonds look to be communicating lower yields, which we would presume is risk appetite beneficial to stocks. And at the same time, equities are doing their own thing. So there's definitely a disconnect between yields and the movement in the indices right now, the movement in stocks. So with that being said, let's go ahead and jump into your questions. All right, did you settle down, dog? All right. She is a good girl, but my gosh. All right. Okay. Let's get to it. All right. Oh, bot. Yeah, the mic is good. Okay. Yeah, the dog was just absolutely going crazy. So I figured she was getting into the. Oh, and maybe she really wants to be long today. I don't know. She was pretty excited about something. All right, let's get to the first question. All right, free trading room. SBLK. All right, let's get into it. SBLK. And I'm going to presume it's the daily time frame, unless you put a time frame in there that's other than that. So SBLK, we'll look at it through a couple different views. Number one, it is above the anchored VWAP. And by the way, those of you, I know many of you have the Volume Max package, formerly known as the VWAP Max package. Same thing. We just changed the name to, well, make more sense. And the emphasis on volume is what? Volume profile. The emphasis is on price-based volume, not time or date, which is a very different view. Most traders, and investors look at volume from the perspective of how much came into the market at 9:30 or on a Tuesday. We're more interested in where is the volume from a price perspective. SBLK is caught. It is above the VWAP. Now let's take a look at it from another point of view. Let's take a look at it from the point of view of the TOPS system. All right, TOPS system says SBLK, and let's go to, let's see here, daily. Let's go 2 years and take a look. And SBLK trying, it's very, 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 very fresh, but it's trying to segue into an uptrend. And here's the important part. See these white dotted lines? That is the 200 propulsion. That is the classic moving average cross and the 200 exponential moving average saying, yep, this is in play. That 200 is the equator. It's the bullish and bearish hemispheres, if you will. We're coming out of the bearish into the bullish. That's an important shift, Caught? That is an important shift to keep an eye on. But it's very vulnerable right now, so I won't be surprised if there's some weakness as we try to figure out who owns that level because the battle is raging. And we are overbought on the stochastic. So that is relevant because this is not quite an uptrend yet. It's still probably hanging on to more of a neutral look. All right, Ann, how are you? What about gold? Love the question. I am bullish gold, quite bullish gold. Yesterday, we had an intraday short, but I think I was in the Sector Secrets Mastery talking about this, and someone said, but wait a minute, Rog, looking at volatility, it seems, and I'm going to show y'all something here. It seems that when we look at volatility, there was a 1 hour setup. So let's pull up the volatility and I'll show you what that looks like on the 1 hour. And here we go. So I'm going to go to the 1 hour chart and put the daily price movement range on there and take a look. So this was actually, and I can't remember who asked, but what a great question. Take a look at that wick that sunk into the daily price movement range. Yeah, gang. That right there, that's a buy zone. That is a buy zone. Because what is this area? This is a floor. What is a floor? A floor is support. What is support? Support are buyers. What are buyers? Buyers represent demand. And that's it. That's it. So you think about what this is indicating based on volatility, and there you go. So that's where we are right now on GC. And yeah, I'd be open to another opportunity somewhere between 1920 and 1910. Take a look at that 200 propulsion. We love that on any time frame. Does not matter. And there it is doing its thing. So I like the buy in gold, and it might be smart to shift to a 1 hour until that daily time frame gives us another opportunity. All right, the follow-up question to that was copper. Yes, copper is trying to organize. Let's go to the daily time frame into an uptrend. You can see that we started that process on the 10th, on the 11th of this month. Today is the 24th. So we've got a pretty nicely established uptrend at this point. Buy the dip is valid. Buy the dip is valid. All right, next up. All right, from our YouTube channel, question from Mimi, who asked, what's the difference between futures and options? Well, in the most basic sense, they're two different markets, right? I can look at commodity futures, which are leverage products that allow us to trade everything from corn to the Canadian dollar, right? But it is leveraged, highly leveraged. Options, well, there are options on futures. It's a derivative. I know, $10 word, but it's a derivative, and it could be an option on an ETF, option on a stock, option on a futures contract. So they're two different markets, and they're two different risk profiles as well. I would not recommend brand new traders venture into futures as their first foray into trading. Micros could change that some in that we now have a lower initial margin, lower per dollar risk or reward with a micro. Those are very, very new contracts. And that might be one way newer traders can venture into futures. But I'm a big fan of traders of any market, stocks, futures, options, stock futures, and ETFs, starting with options. Because if you start getting very good, and this is what we teach in the mastery, this is what we teach in the rooms, quite frankly. If you get very good at harnessing the power of momentum, you get very good at buying options while you have the advantage of paying as little as possible, following the trend, things of that nature, you will be able to translate that information over to the underlying. Meaning, if you can play the option of a futures contract, an ETF, or a stock, you could trade the stock or the futures contract or the ETF. But frankly, a lot of folks just stick with the option, right? The leverage is still good, but it's not as high as futures. But my two favorite markets are the futures markets, especially for day trading, and options on ETF stocks, and even sometimes futures. So they are just two different things. I think the risk profile and the leverage is probably the biggest, differentiation, in my opinion, of those markets. All right, next up, Chris. Good morning. I love the HPMRs. Me too. Why is using an HPMR shadow better than using a minor high-low pattern with the stop just a few ticks away from the setup, maybe re-entering if we got a big quick stop out? I don't know that it's quote unquote better. Well, let's take a look at the HPMRs and then we can, make some decisions about what they're telling us and what kind of stop loss placement we can consider. So I take a look at, for example, the S&P. And I've got my hourly price movement ranges, the time and volatility tool on this chart. You notice that the height, the width, whatever you want to call it, of the tool varies. See how tall this is here as opposed to how narrow it is? This is higher volatility. And so my approach is I want to align my risk and reward levels to the kind of movement we're seeing in the market. And that's exactly what HPMRs do. These are not fixed heights. These are not fixed distances. You'll see they definitely can be much larger depending on the time of day. So then my stop loss is going to reflect that. Now, if you would prefer to keep sort of a cheated in stop loss using a price pattern, like the minor high low, like an inside candle, even a 1, 2, 3, that's fine. It's not that it's a right or wrong. It's a different risk profile, kind of going back to Mimi's questions. It's just a different risk profile. So if that works better for you, remember, you're likely to get stopped out more often. So if you can get really good at taking those micro paper cuts and not being disheartened that the trade didn't work, and you're willing to take the next opportunity, but again, keep it at a very micro paper cut, there's no harm in that. But that style of stop will likely stop you out more often. That also means we probably want to reduce our budget. That probably means we're going to anticipate being in trades more often. So there are adjustments to be made for that, but it's absolutely possible. Sure. Just a very different opinion, right? Different strategy on managing risk and also increasing the number of trades you're likely to get. I think that but here's one thing: if you're using a minor high-low stop, remember scaling in is probably going to work really effectively too. So I know that's a big answer, but since you asked that question, I think you understand the layers within my holy grail, right? My risk management position sizing approach. And think about that in work on the budget. Work on that budget, probably reduce it maybe to 3%. So thank you for the question. All right, David asks, can I explain the implication of candles of unusual size, our COUSs? Yes, the implications are if we've been just sort of plugging away with a 2-3 point candle, let's say the S&P, 2-3 points every 5 minutes. And all of a sudden, a 6-7 point candle comes up. It's 9:30. That makes sense. It's the open. It's 10 o'clock. Maybe there's a hot zone. That makes sense. However, that extreme amount of opinion could be telling us something. Maybe there's a shift in sentiment. The sentiment affects momentum. Momentum can eventually affect trend. It's something different. It's something out of the ordinary. And it does merit our being a little bit more prudent about what we want to do next. The market is then, whatever market it may be, S&P, dollar, bonds, Apple, doesn't matter. It's telling us something's, again, unusual, and maybe it makes sense to wait for a pause candle. So large candles are going to get my attention. Most traders will just venture into, so yesterday on the open in the Dow, we had a large candle. And a lot of traders, most of whom like to focus on momentum, which is fine, will look at this candle right here, the 9:30 candle, and say, oh, let's short. In our room, we said, we're so close to an hourly price movement range. We're so close to an oversold stochastic. We're in a neutral market environment, or at least trying to transition into one. Maybe there's actually a pattern that's going to set up a buy. That's exactly what it did. So that's why they're so important. What does that candle mean? And has it closed the distance to something that might seem contrary to what the direction of that candle actually is. There's a lot of implications like that. If nothing else, just pause, right? That's going to be my recommendation. Just stop, right? There's a great acronym for stop, and it's escaping me right now, but there's definitely that idea that we want to stop and then reevaluate everything. All right, next up, DC says looking at HL, sure, on a daily chart. Got it. Agro 5. Ooh, it's an under 10. Okay, it's an under $10 stock. Agro 590, moderate 565. Yeah, I see where you're going with that. Thoughts? Yeah, DC volume. Check out volume. I would look at this almost with more of a priority to volume. Take a look at the anchored VWAP at 6. That 590 is fine, but we might stop at 6. That could be very interesting. We are in an uptrend, beautiful. But I would say, especially for stocks and anything under $10, equities under $10, volume is going to be a huge priority. Now, what if we go with HL? I'm going to jump on over to TradingView so we can take a look at the volume ledges. Where is size? I'm going to kind of quote unquote anchor this to, here we go. It's basically the first of the year. I know that looks weird, but this is the volume since the beginning of the year. Point of control, that's the most volume that HL has seen since the beginning of the year. That means at this price, we have the most size. And then we have another volume ledge, a couple different ledges in play. So I would say rather than sort of moving averages in sort of a technical view of HL, I would go almost exclusively volume profile, and that's how I would do it. And anchored VWAP, the volume ledges on TradingView could be very powerful. The other thing you could do is just squeeze in a year. So go back to, say, let's see, let's go back a year to, there we go, 2022. And that will tell you where your upside resistance is waiting. Isn't that interesting? You're going to run into a possibly a lot of selling in the area between 675 and likely 730. So those are things you're going to be able to look at with the volume, which I think is so much more important on a sub $10, sub $20 stock. All right, next up, Robert, thoughts on XLK? Sure. XLK, it reclaimed the 200. So let's jump on over to our tops layout. It reclaimed the 200. Let's go to the daily. A bit yesterday. It's trying. It's at 133.55, so it got rejected. Well, why did it get rejected? By the way, again, let's go through the same process. Neutral. Overbought. Resistance. Not only the 200, but take a look at the Darvis as well. Not Darvis, sorry. Take a look at the, well, there is a Darvis there. I take that back. There's a Darvis kind of close. Now take a look at the DPMR. Boom. Right? So it's already falling below. So is that the dip? No, not a dip. Not a dip. This is an overbought sector running into the 200, running into a volatility resistance level with an overbought stochastic, most importantly, in a neutral environment. Yeah. So definitely keep an eye on neutral markets running into resistance and just presume it's going to stall. We don't want to get in the habit of presuming follow through. We don't want to presume it's going to keep going. I think that gets us into a lot of trouble. I will expect maybe a 50% retracement, Robert. And at that point, we can see what's next after that 50% retracement. Yeah. Mario, yes, stop, think, observe, plan. I knew there was a good, yeah, I love that. Mario, thank you so much. That was running in the back of my head. How did you know? Stop, think, observe, plan. I love that. If at any point in a trade, we want to just stop, think, observe, plan. Love it. I remember reading a book by Richard Matcha. He was a Navy SEAL, and he had a similar way of how to engage, situations, stressful situations. So let's face it, trading can be a little, anytime money's in the line, right? It's a whole other level of emotion. I love that. Thank you, Mario. All right, gang. And just like that, our show is out of time. As always, thank you so much for being a part of the Simpler community. Maybe you're watching in the free trading room. Maybe you're watching on my YouTube channel, Raghee Horner. Regardless, thank you so much for your love of the markets, wanting to get better at it. You all inspire me. And thank you so much for being here. And I'd be remiss if I did not mention, gang, Wednesday, it's coming up. Wednesday, February 15th, we're going to get into tops. We're going to get into DPMRs, a lot of things that many of you are maybe vaguely familiar with, but you don't maybe know how to apply them, most especially in this environment. So we'll be diving into a lot of examples. I've gotten a few emails where people say, Rog, this 1 hour thing is looking very, very interesting. Are you going to dive into that as well? We're not used to you looking at 1 hour charts. I am. All right, gang. Thanks as always. Pencil that in on your calendars. I'll see you tomorrow, same time, same station. Be good to each other.